Welcome to another video. My name is Nick and I'm a top author on TradingView with over 260k reputation points. And here in the Transparent FX Academy, every day I share new free education and analysis. So make sure that you subscribe and I will see you on the charts. In today's video, I will be speaking about EURCHF. Now, as usual, first I will be covering the technical aspect of this market. We will then go and see what we have from an order flow perspective. So commitment of traders, which is what hedge funds and the non-commercials in the market are doing. And by the end of the video, by using the combination of these different types of analysis, we will try to understand where we have the highest probabilities for a potential move here on the pair. Now, starting from the monthly time frame, what do we see? Now here in the monthly, we can see how at the moment we are testing extremely strong monthly demand and support. In fact, from here the market started all this move to the upside, and at the moment we're testing this exact same level of demand and support, from which there is definitely the possibility to get a rejection to the upside. So here in the monthly, everything seems quite bullish. We drop down on the weekly time frame, and what do we see? Now here in the weekly time frame, we can see how the market has just printed this overextended M formation. Now, in general, after the creation of an overextended M pattern, you want to see the market provide a correction at least to the 0.32 of the Fibonacci taken on the weekly impulse. So in this case, if we take our Fibonacci from the high to the low of this weekly impulse, what we expect is for the market to provide a correction here at least to the zone that is in between this 0.32 and 50% of the Fibonacci taken on this weekly impulse. So what we expect here is for the market to provide a correction at least to this area. Just a quick thing, make sure that you like the video, subscribe, and let me know in the comments any suggestions for new videos. Dropping down on the daily time frame, what do we see? Now here on the daily time frame, we can see how the market has just started this horizontal accumulation. Actually, we already seen a little lower low created here, but in general, it's quite clear that the market has been losing its bearish momentum and at the moment is decelerating in this kind of a descending wedge formation, okay, where we are clearly getting deceleration. However, we are also creating new structure. In fact, we can clearly see how these two rejections here just created a level of resistance here that if the market will actually manage to break to the upside, should it then bring to the move to the upside that we want to see from a monthly and weekly perspective. Now, if we go and see what we have when it comes to the COT data, so what the non-commercials, the biggest speculators, so hedge funds are doing in the market, we can see how lately on the euro with the last reports, net positions have been increasing, getting less and less negative. We could also expect at some point net positions to shift to positive, since we are clearly getting this deceleration, which could definitely be in actual accumulation, since we are clearly seeing here the overall outlook from an institutional perspective on the euro become bullish. And if we go and see what we have when it comes to the CHF, we can see how we still have a pretty negative net positioning of minus 20.6k net positions with way more shorts than longs, 22k shorts and 1.4k longs. And a weak CHF and a strong euro is exactly what we need if we are to create this move to the upside. So the way in which we will be approaching this with students is as usual being reactive and not predictive. If the market will actually manage to break above this previous resistance will then be turned support. And the retest of this previous resistance turned support is the best area inside of which we could be looking for a potential move. So if we will get the break and retest inside of here, what we will be doing with students is monitoring price action from an intraday perspective. Why intraday? Because monthly, weekly, and daily combined with the COT data are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, if we will get a proper break of structure and retest inside of here, we will be monitoring price action with students from an intraday perspective, and if the market will shift from an intraday bearish to an intraday bullish market, we will be adding EURCHF to our watch list, and as soon as the market will provide to us one of our valid entries, we will be looking for a potential long with a good risk to reward and good probabilities at that point for the move to the upside and for the market to retrace at least to the 0.382 of the Fibonacci taken on the weekly impulse. If you enjoyed the video, make sure that you smash that like and comment below. It really does support the creation of more free education analysis for all of you. You can also go and check out the mentorship program. The link is in the description. It's a very complete program. First, you learn all the rules of my rule-based strategies. Then you get a new daily market breakdown every day showing you how to apply the strategies in actual real market. And you also get your questions answered every single day in the daily Q&A session. So it's a very complete program. I suggest that you go and check it out. The link is in the description and I will see you in it.